Hello, my name is Marty Foreman. I'm a state specialist with University of Missouri Extension, Ag Business and Policy. In this video, I'll review USDA's December supply and demand update. USDA doesn't update 2020 crop production in December, so the focus this month is on demand revisions as well as the outlook for China and South America. We'll start with the corn outlook. This is the supply demand table from USDA, and this month USDA made no changes to supply and demand. As I mentioned, USDA doesn't address production estimates in December, but nonetheless they didn't revise any of the demand components this month either. So we're left with ending stocks down here at 1.7 billion bushels, or 11.5% stocks to use. I would note that this ending stocks number is down sharply from where USDA was at back as recently as August. USDA had about a 2.7 billion carryover estimate plugged in at that point. So we've seen the stocks number decline by roughly a billion bushels, since late summer. The other thing of interest here is the exports. That's one of the key drivers in the corn market behind this price strength that we've seen through the fall. And this 2.65 billion bushel export forecast, while they didn't revise it from last month, you can see how much higher it is compared to the previous marketing year. So a big change in the export forecast for corn has been at least partially responsible for this stocks tightening. The other side of this is that although no revisions this month, USDA has revised the yield and the acreage down a bit since earlier this summer. Also, we had a pretty large stocks, September 1 stocks revision or estimate compared to what USDA was carrying on their balance sheet. So that's really fundamentally changed the supply-demand balance for corn. Regarding China, we've got, this is a graph just showing production and consumption, and then corn imports into China. You can see the blue line is the production. You see how the gap between production and consumption. So this was a stocks building time for China. More recently, their production has been relatively flat while their consumption has continued to grow. So this is indicative of stocks drawdown. And then in conjunction with that, we've seen China's imports begin to increase. And USDA did bump up their forecast for China's corn imports by 3.5 million tons up to 16.5 million. This is kind of in line with what they have booked, committed to buy from the U.S., along with some exports out of Ukraine as well. I would mention that USDA did make some revisions to the Ukraine's production. After some downward revisions earlier this year, they revised Ukraine corn production up 1 million tons to 29.5. That was mostly offset, though, with a lower Argentine number. They cut Argentina's corn production by 1 million tons down to 49 million. This is the export graph. It shows the 2.65 on the far right there. That's the forecast for corn exports. You can see this would be, if we realize this would be a new record high for corn exports out of the U.S. So a very strong number, and the trade will be monitoring this closely to see that we stay on track or whether we fall short of this. But so far so good. It looks like export commitments justify that kind of a figure. Stocks to use, you can see the blue bars here is the stocks to use percent, right now at 11.5%. That's a couple points below the long-term average for stocks to use for the U.S., but they are tightening. So what it will depend on what the final numbers are for crop production next month. We could see this tighten up a little bit further. The other thing, the other line here on the graph is the season average price. So this is the USDA season average price received by farmers. This is what you see on the World Ag Supply Demand balance sheet at the bottom for the U.S. farm level price. So that as stocks have come down, we've seen prices rise, and although they made no change this month, the holding at $4, that number is up from the past few years. So stocks tightening, anytime you get below about 10% stocks to use, that's where things start to get pretty interesting. We're not quite there yet. As far as the price chart, this is a futures price, a weekly nearby corn futures. So each one of these bars represents a week's worth of trading in the nearby futures contract. You can see how sharply prices have climbed from late summer back in August, close to 320, all the way up to 440 a couple weeks ago, and then we've seen prices pull back and consolidate. If you looked at the daily chart, looks like we could see some further correction down from here. I do think that we should find some long-term support here around the $4 to maybe $3.90 area. So I would expect any pullbacks through the winter here to hold at that area. And then if we can push higher on into the spring, the key number I think is this 440 price level. If we see the nearby futures push through 440, especially a couple of closes above that level, that opens the door for some follow through to possibly retest that 2019 high all the way up to 473. As far as soybeans go, this is a soybean balance sheet. USDA did make some slight adjustments on the demand for beans. They increased the soybean crush by 15 million bushels up to 2195. That would be a record high for the U.S. soybean crush. No change in exports. They held at 2.2 billion bushels, but again, similar to corn, we've got a big increase in soybean exports year over year projected. And again, that's China. We've been boosting these sales to China. They slowed down here in recent weeks, but we're off to a pretty strong start for the marketing year on soybean exports. With no other changes to demand, that increase in the crush fell to the ending stocks, which were lowered by 15 million bushels, and put the percent stocks to use down to 3.9%. So this is getting pretty tight on soybean ending stocks. And with that, USDA raised the season average price by 15 cents to 10.55. This is I just wanted to put a map of the precip in South America. This is a 30-day precip map. You can see those sort of oranges and yellows on here. This is indicating the dryness. So we're running below normal precip across a big portion of Brazil, and then down in Argentina as well. Now they've gotten some rains recently, enough to kind of support the crop. Doesn't resolve the sort of overall drying pattern down there, but allows the crop to not fall under too much stress at this point. But this is something that we'll have to continue to monitor. They're under the La Nina weather pattern, which tends to be a dryish pattern in South America for weather. So we could continue to see this dryness persist on into early 2021. This is a key factor in the market, is how this situation unfolds down there. China soybeans. You can see the blue line here is domestic production. China's soybean production clearly flat, not any growth there. So their demand growth has been in China. The consumption increases have been met with rising imports. So you can see now China's forecast by USDA to import 100 million tons of soybeans from U.S. and Argentina, South America. So this is a strong number. It would be a new record high for their imports. Stocks and prices. So soybean stocks, I mentioned earlier, stocks to use was down 3.9. This is the lowest stocks to use since 2013-14, which was one of the lowest in modern history for the soybean market. So soybean supplies are tightening up. As a result, the season average prices have been firming. So this will be key. Where does the final crop size come in for the U.S. and how does the situation in South America finish out? This is the soybean price chart, although this is the monthly prices. So this goes back longer term. This is a more longer term perspective on prices of soybeans. So you can see this sort of $8 to $12 range. We've moved from the low portion of that range up to the high end of it, retesting the high from 2016 just below $12. So we've been working against that level here of late. So I wouldn't be surprised to see some further correction here. Maybe we pull back towards $11, $10.50 or something like that. But if we get into early part of next year, anything above $12, I think that's kind of the key number over the market. Push through that. That opens the door for a further correction of this entire down move from the high back in 2012. So that would carry us back close to $13. 62% correction would be all the way to 14. Not necessarily predicting that, but that's something you have to be aware of, especially if we're able to make new highs in this market. If not this year, but into early 2021. And I think Chinese demand and the situation in South America will determine whether we're able to do that or not. Okay, that takes care of it. USDA will release several key reports next month. USDA will update corn and soybean production for the U.S. in January. They'll also release a grain stocks report, grain stocks as of December 1, and also release winter wheat seedings report at that time. So these are all important reports and potentially market moving ones. So be sure and check back with us in January. I believe those reports are out on the 12th. That concludes this month's update. Thank you for watching.